All right, guys. So last week we covered sheriff sales and foreclosure auctions. But what about bank-owned or real estate-owned properties, or also known as those REO properties? Well, these properties are the ones that failed to sell during those foreclosure auctions and have fully reverted back to the bank. And today we're going to go over some basics. So listen up.
Welcome back to this week's Did You Know Real Talk with Nina and Christine. So you want a foreclosure opportunity without the stress of bidding wars and mysterious interiors, right? Well, buying an REO home through a licensed agent can give you the access and knowledge you need to navigate the buying process smoothly.
Now, how do we find these properties? This is a pretty straightforward, basic question, guys. They're usually going to be listed with a local real estate agent, so they'll be able to be found on the MLS. Do like traditional listings. You can also find them on your public searches like Zillow, Realtor.com. Simply just put in keywords like REO or bank-owned, foreclosure, or something as simple as sold strictly as is. They'll typically come up. Now, government entities like Fannie Mae, Freddie Mac, and the HUD will also hire local listing agents for their properties as well.
But keep in mind, not every foreclosed home is going to make it to the MLS, because some banks will skip agents and the MLS altogether and sell directly through other channels, right? So some of these channels, you've got online auction sites like Hubzu, Auction, and Zome, and you have direct access sites, which are really just like the bank and credit unions, their websites where you can bid directly, or bulk sale listings.
Now, if you are working with an agent, he or she can set up a targeted filter in their MLS to pull bank-owned inventory the moment it hits the market. Or if you find the property online, you can reach out to the featured agent directly. Now, there are some pros and cons to consider here.
So let's talk pros. You've got price, risk reduction, and transparency. So we talked about reduced prices, right? And this is always a plus. However, unlike a sheriff sale, here you get to actually walk inside the house and you get to have a home inspection. Plus, the bank has usually cleared the old liens, and most often you get a much cleaner title.
Now, here are some downsides. These homes are typically sold strictly as is. The bank has never been in these properties, so they're not going to fill out standard property disclosure for you, and they won't pay for repairs or give you any credits for updates. If the inspection does uncover major defects, you can try to negotiate the price down, but beware. Banks are often very rigid, and they typically are going to stick to their selling the home as is. Now, your success in trying to negotiate with them depends heavily on having an active inspection contingency in your contract and presenting concrete high-cost estimates for those repairs. However, usually your home inspection is for your knowledge only. What you see is what you get, and they are not going to negotiate.
And so you have to understand highest and best with banks is also a little bit different. When an REO hits the market and it's priced under value, you're usually going to get a lot of offers, right? Multiple offers. So the listing agent will typically announce a deadline for highest and best. And here's the critical thing to remember. With a bank, highest and best almost always means the highest dollar offer, period.
Exactly. Banks do not care about emotional letters or family stories, guys. They're strictly looking at the net bottom line, as their main goal is recovering from their loss of outstanding mortgage balances, legal fees, and holding costs.
All right, so the offer process. You're going to start with a standard state contract, but once it's accepted, the bank requires you to sign their REO addendum, which is extensive. These are state-heavy documents, and they override the standard terms to protect the bank. They set strict deadlines and daily penalty fees if closing is delayed.
Another thing to note is that banks do not need to respond immediately. Now, while they typically do respond within a week or two, they can technically take up to 3 months, though that's normally not going to be the case. They normally do respond within those 2 weeks.
Another piece of good news is that the paperwork flow is fairly seamless. Everything's handled electronically through e-signatures, which keeps your transaction moving so you can head straight into settlement and closing with ease.
Now, when you finally reach the finish line, closing looks just like a standard real estate transaction. Title company is going to handle the transfer, funds are wired, and a deed is recorded electronically.
Once that deed hits, hey, it's yours. Getting the keys, it's as simple as it gets, right? You're not going to need to hire a locksmith to break in. The listing agent will either hand you your keys at the door or give you a lockbox code so you can get them right out of the front door.
Now, as licensed agents, we can help you find bank-owned properties through the MLS in New Jersey. So feel free to DM us, or you could reach out to us through our contact information that I'm going to put up on the screen right now.
All right, guys, that's it for this week. Did you know Real Talk with Nina and Christine? Thank you so much for joining us. Please like, share, and follow, and we will see you next week. Have a wonderful day.
Bye, guys.